Thank you guys for clicking on this week's video. Today we're going to go over a secret dividend investing strategy. Now, this strategy is not going to have you be investing for dividends in particular, meaning I'm not going to have you invest into like a stock just because it pays like a 7% dividend. You're like, oh wow, it's going to give me great returns and all that, which if they're paying 7%, usually that's a red flag. They're just trying to entice you to buy the stock. More often than not, I could be wrong. Do your research, do your due diligence. But the strategy I'm going to talk about today is not a lot of people talk about it. And basically, this is how it goes. You find companies that, and I usually do this with well-known companies, so typically blue chip stocks and stuff like that. You'll find where they're paying a, let's say, 5% dividend right now, right? That seems kind of high. And you check when the last time they were paying that, and you're like, oh, they've really never paid that before. This is the most they've ever been paying. And then you buy into those stocks, and as soon as it corrects and that 5% dividend becomes a 2% dividend that they're paying on the new stocks that have been issued because it went up, you then sell off those stocks. Now, basically what this entails is that you're looking for stocks where they're paying a higher dividend because their stock price is a lot lower. So their original payment amount was on X amount of dollars. They've now dropped to this amount of dollars. They're still paying from the previous quarter that set percentage, and because of that, usually institutions or other retail traders like yourselves will buy that stock, sending it up, recorrecting that dividend payment into a lower percentage, and then helping you sell the stock, or wait till the quarter's over, get your money, and then sell the stock. So to give you like more of a real life example on what to look for, let's say you find Bank of America, and let's say they're trading at $20 a share, and they're paying a dividend of about, let's say, 6%, right? And you go back and you check, and you're like, okay, when was the last time Bank of America paid a 6% dividend? And you look and they're like, oh wow, they've never paid something this high. And the last time it was around this percent, which was about 5.5% or say something like that, the stock actually went up over the next few weeks. You look for that pattern, you're like, okay, this stock is at this dividend yield. It is definitely a bargain. You then buy into it, and with the new correction and the new quarter coming up, afterwards, they're going to pay a certain percentage on the new evaluation, which will typically be lower since it'll go from $20 to, let's say, like $25. And now they're like, hey, we're going to pay a 3% dividend on this instead. And then you're like, oh, okay, they're typically always at a 3% dividend, so I don't really want to own this stock anymore. And you go ahead and sell it and take your 20% gain or so. That's basically the gist of how this method works. You don't always have to make this your sole base on how you invest. You can actually even just use it as more of a thing to watch and look out for when investing, or there are some people and some traders who actually do invest solely based on this strategy. So again, I hope you guys liked the video. Remember to leave a like, comment, and subscribe for more future content.